But for this, viewers, let's put the spotlight on IndusInd Bank because that counter will indeed be in focus on the back of the earnings. For now, it's been ailing under pressure on the stock price as well. And of course, what we have been hearing is the account discrepancy audit that will definitely impact the earnings and the set for the bank in this particular fiscal. But what is the street really penciling in? Let's go across to my colleague Gaurav, who's standing by with more details.
IndusInd Bank is set to report one of the weakest quarter that we have seen so far, and there is some reason behind it. First, when we talk about the operational updates for Q4, we have already seen the bank has been suffering because of the higher MFI exposure, and as a result, when we talk about net interest margins for the last 4 quarters, we have seen net interest margins has fallen significantly. Other than that, when we talk about the MFI, the stress is not likely to go in near future, and that is the reason why that is one of the concerns. But apart from that, there is another concern which comes as discrepancies. When we talk about discrepancies, we already know that in this quarter, bank is set to report discrepancy worth 1900 crore rupees because of the currency, and second discrepancy in net interest income in terms of 600 crore rupees. So definitely these numbers are going to impact adversely in terms of profitability, and if we consider these, the net interest income is likely to go down almost by 23%, and the PPOP, which is pre-provisional operating profit, is likely to go down more than 50% on a year-on-year basis. In fact, when we talk about asset quality, some concerns may still remain, and that is the reason why now brokerages are expecting slippages to remain elevated and credit cost also to remain elevated. Other than that, when we talk about profitability, bank can actually report losses in this quarter, but let's also not forget that bank has contingency buffers, and now brokerages are also believing that bank may use these contingency buffer to report profits and take some of the hit on the contingency buffer in terms of whatever discrepancies the bank is likely to report. Other than that, when we talk about advances and deposit, there also we may see a slowdown. They are expecting 6% growth on a year-on-year basis in both advances and deposits, and these may remain flat on a sequential basis. Other than that, when we talk about the commentary, we are expecting some kind of commentary in terms of how the management trend is going to be, because let's not forget that because of these discrepancies, CEO has also recently resigned. So definitely any kind of commentary on that front, how the growth is going to be, is a key thing to watch out for. How bank is set in terms of their asset quality is also something to be watch out for. And let's also not forget that now street is expecting net interest margins to contract more than 20 basis points sequentially. So definitely any kind of commentary on how the NIMS trajectory is going to be is a key thing to watch out for. But definitely a weak set of number is what street is expecting from IndusInd Bank in this quarter.